Good afternoon, everyone. Welcome back to the Comstock channel. I am Relph with Comstock Investments. Going to take a look at our weekly livestock roundup here, starting first with some of the fundamental data points. Box beef really didn't do a whole lot this week. We were higher to start the week, then we had a sharply lower day on Thursday, and then about steady to end the week on choice cuts on Friday. However, we were higher on nearby feeder and live cattle futures for the week, but deferred contracts couldn't muster the same strength. So right now I'm looking at the August feeder cattle continuation chart, and you can see with the naked eye, the setup is here for a W formation. It looks like we would mount a recovery into the 370s if that is verified in the coming weeks or even months, depending on how slow this grind takes. But with September trading $6 below the August right now, I think it's going to be difficult to get that kind of strength with the August going off the board at the end of the month, September taking over as front month. Are we going to be able to see the kind of recovery we need to put $30 on this market over the next 6-7 weeks? Seems unlikely, but the feeder cattle barns are absolutely on fire. So anything is quite possible. Just depends on if we can keep the demand up for these cattle in the sale barns across the country. We saw $20 to $25 jumps in places, a lot of $15 to $20 higher trade being reported for the feeder cattle. In the case of the live cattle, we look at the August contract. Again, it was higher for the week. We finished 47 cents higher on Friday, 231.70 last trade on that. While we have fed cattle cash trade coming in anywhere from 235 to 240, with some of that 240 being reported late week in the north. We are going to be well below the weighted average because even at the bottom end of that range, that 235 is still going to be about 330 above our last trade here in the August. Still, we have been higher for 7 out of the last 9 sessions, so not all is lost there, and it looks like the recovery could continue. On a continuation chart, the big thing to watch for is going to be the 100-day moving average at 244. That is about $13 above the market, but we've got to take out this week's highs first. The biggest high being in place on Wednesday at 234.87. So that's going to be our nearby resistance level that we need to get through to open the door to that 100-day moving average. Whether or not we can get that done is going to depend on market ready supply, how staunch the feeders are at digging their heels in and making the packers pay up for these cattle, and what the demand is going to be from the packers. We heard a lot of stories this week that large buyers for the big 4 packers were only buying a certain number of head in certain regions and playing these kind of games that can often keep the market in check. Hopefully it was nothing more than games being played, and by the time we get the numbers printed from the AMS on Monday, we'll see that they were actually buying in a meaningful way, and that should give feeders the confidence to go ahead and hold out for higher prices as we go through next week. On the lean hogs, we did see some notable trade this week. August finished on Friday unchanged at 95.50. However, it was a down week all week long, and we are getting eerily close to the lows that were posted in June in this August contract at 93.97, about $1.50 below last trade in this market. That is a spot that really needs to hold for these hogs. We've seen the cash market kind of ebb and flow here of late. We've seen some improvement for a couple days, only to be flat for the rest of the week. Cutout values remain above $100, at least at the midday reporting today. We'll see if we can hold that to the afternoon reporting. Deferred contracts were higher on Friday, but it was down for the week across the board in all of these contracts as well. Without the cash and cutout helping out along the way, it's going to be difficult to get these futures contracts to rally much. And even though we've seen some strength here leading up to a couple of weeks ago, we still haven't seen the kind of seasonal rally that we would normally see in the hogs. And we've not had the summer months really above $100 to speak of. Third and fourth quarter hogs definitely struggling. October and December at $82 and $73 respectively. That looks like there's room to go to the top side if we're not going to just pulverize this cash market in the meantime, so we'll be keeping an eye out on that as well. Of course, traders are going to continue to monitor the mandatory country of origin labeling as well as product of the USA labeling. Getting MCOOL included into the Farm Bill was a big victory for many. We also have the Mexican border reopening in phases coming up sooner than later. We've got to keep that at the back of our mind also, so that we're still going to see the headline reactive trade and the increased volatility. But hopefully we can keep these trends in the cattle moving higher and get these hogs turned around before they take out those June lows. So I appreciate you joining me this afternoon. On behalf of producer Breanne Jenkins, I am Relph with Comstock Investments. We'll see you right here next time on the Comstock channel.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.